Hey, what's up everybody? This is Tanner from the School of Day Trading. I just want to do a video today going over a really simple and basic day trading strategy that is really good for beginners to use. It has really clearly defined profit targets, stop losses, and it doesn't take a whole lot of skill and chart reading or anything like that. So to make things easier, I've started off by just creating a Word document here, going over an outline of the strategy, some of the chart setup, the risk to reward ratio. So if you want to take any notes that you can keep next to you as you're trying to utilize this play, these would be the things to take down. So the simple day trading strategy we're going to go over today is called the ORB. And ORB stands for Opening Range Breakout. So opening range breakout. The opening range is defined by the high price and the low price set in that very first 30 minutes of trading. The key is to look for a bias towards either the high price or the low price set in that opening range. The buy rules are as follows. A buy long would take place when the price breaks above that opening range high, and a short or put would take place when the price breaks below that opening range low. The risk to reward ratio utilized would be a 1 to 2. So essentially you'd set a 5-cent stop below entry and a 10-cent target above entry if you were using the 1 to 2 ratio. Or it could be a 10-cent stop below entry and a 20-cent target above the entry. But one thing to keep in mind, if the price is near a whole number, say it's $89.88, you could use the target of $90 as the target price. And if there is a whole number below the entry price, if you're at $89.10, you could just use the flat 89 as your stop. The chart setup we're going to use the period is going to be the 5-minute 1 day, and the type is going to be candle. So we're just going to jump right into it. It's not going to be a very long video. It's a really simple strategy. As you can see, I'm going to go ahead and use E-Trade. This will work on any charting system. It doesn't need to be E-Trade, but that's just what I have pulled up for now. So first we're going to make sure we have our guideline. And so as the day opens, we have Facebook pulled up right here. As the day opens, we're just going to keep an eye on it, see how the stock moves, see which way it's headed towards, where the bias is. And as these candles start to fill, so you have a 5-minute here, 5 there, that'd be 10, 15, 20, 25, and 30. Then the first thing we would do is go up here. I can see I already have some guidelines. I need to move those. And we'd put a guideline right up. Well, let me delete some of those. Let me just remove them all. Replace them. So we'd put a guideline right at the top of that 30-minute high. And then we'd go to the low, which is way down here, and put a guideline down there. See, the chart really won't let me put it all the way down there, but you'll understand it's right down there. We're not really going to focus on that for now. And so what we do with the rest of trading is we just watch to see if there's a break above this high or a break below this low. But as you can see with Facebook, it clearly had a bias towards the high. So if it were to go from here and all of a sudden drop all the way down and break down, that's not necessarily a play we'd want to make because it was more of a collapse and didn't have a bias in that direction. So with this one, as you can see, it goes up, sets that high, hits this candle, comes down a little bit, but starts to immediately work its way back up and actually gets a quick break through right here. And that would have probably been, that is actually where I would have entered as soon as it broke above and had 67.87 on the bid. I would have entered in at 67.88, which I did, which would have been right here, and set my stop at 67.78, which was 10 cents, which would have been down here, and my target at 68.08. So all the way up here. And as you can see, as this one, it broke through, it came back a little bit, but it was able to break through with a lot of force and a lot of momentum and quickly reach my target of 68.08 up here and actually continue on further. So this could have been one where you could have shed off a little bit at the 68 whole number and then emptied the rest out at your profit target of 68.08. And so let's go look at Apple real quick to try to make this a little more clearer of really how simple this strategy is. As you can see, I have the 1-day setup on Apple. So we would, at this beginning of this trading day, we would have the 5, 10, 15, 20, 25, 30. We would have set our guideline right up here and our low right there. And so we'd be looking for a break above or below this line. And what you can see here with Apple is what happens a lot. Essentially, it goes up, it sets that high, it comes back, settles, but starts to really work its way back up and show a clear bias and actually set. This is exactly what you want to see happen. Is it sets. Let's see if I can get the trend line to work. It creates an ascending triangle, as you can see right there. This way, there we go. And so it goes up, sets the high, comes down, starts to really trend upwards in the form of an ascending triangle, and then when it breaks out with a lot of momentum and sees a very big run. As you can see, this one we would have purchased if we were doing common stock at 92.85 roughly. We could have set our stop at 92.75 and our target at 93.05. And so you can see it got a very good run quickly up to 93.05, settled a little bit, and actually continued higher, which you'll see a lot. And so if we look at today, this is today's trading day. As you can see, the price is still moving. The first 30 minutes, just to kind of show that it does, this strategy, it's not a holy grail, it's not a perfect strategy, it doesn't work out how you want it 100% of the time. I've been able to track about an 80% success rate though, which is very, very high. So this one we have 5, 10, 15, 20, 25, 30. We set our guideline there, and right down here as well. Oops, let me move that down. There. And so as we watch this one, it goes up, sets the high, comes back, looks like it's showing a good bias upward, and actually breaks. So we would have purchased right around here, right in this 93.80 range, and looking for, if we did a 10-cent target, would have been 93.90, which we ended up getting, and a 5-cent stop would have been down here. But if we would have set any higher target of that, we wouldn't have got that. It actually went up. It would have got the 10 cent, but it couldn't quite break that 94, started to settle back, and as you can see, it kind of held the previous high, but ended up breaking below. And so if we would have had a higher target, we would have ended up being stopped out. We could have moved our stop up once it was up 10 cents. It would have been smart to move our stop up to our actual entry price. So we would have most likely got stopped out even on this play. But the key really I want to get across is this right here. This is what you're going to see most commonly with this strategy, is this ascending triangle or descending triangle if it has a bias towards the low, where it goes up, sets the high, comes back, and starts to slowly work its way back up towards that high with the uptrend and break through with a lot of momentum. So this was the ideal scenario right here. We can go back and look at Facebook. This is another Facebook. This is more common for Facebook, where it'll have those quick moves up or quick moves down. And so it was a very, very quick play. But the stock I played most with this strategy is Apple. So this is the idea to remember right here. And for those of you who haven't followed us on Twitter yet, make sure to follow us at the School of Day Trading for you, because in this coming weeks I'm going to be posting live buy and sell alerts for this exact strategy, so we can get a good idea of how it works, how it plays out. For those of you who haven't subscribed to our YouTube channel, make sure to subscribe. This is just one of many strategy videos we're going to do. They're going to get more in depth. I know this one was kind of more basic and really simple. We're going to do some more in-depth ones. We do a lot of how-to videos, chart analysis. So make sure to subscribe to our YouTube channel. If this video helped you in any way, please like the video. If you have any questions or comments, just go ahead and put them in the comment box. We'll make sure to reply to you, and thanks for watching.